Moving forward from where we left off in our last episode, the we discussed on Monday. Today being uh, Thursday, so that means on Tuesday is when we discuss this level, and on Monday we have the materialization of our level from this place, and ever since we ran into something like consolidation, but I gave an analysis on Tuesday regarding this level, and I talked about moving to 3.1 of our strategy, and discussing evolving with the market, with whatever the market is doing. And we had a lot of winning trades, and at the same time, we had a lot of losses. But you know how we roll now. We trade 1 to 3 risk with 1 to 3 risk reward ratio. So we only need to win 3 out of 10. And we were able to win 12 out of 14. So automatically we are more than 20%. We have more than 20%, something around 30, 40, 60% gain on our something for the past since January. So, and here we are in the market. We had a lot. Then, in retrospect, trying to study what brought about all the losses that we've had. Our objective is to reduce our losses. That's the objective of every trader. So there is no hedge that doesn't have losing trades. You will have losing trades. You will have losing streaks as well. There will be times you will just be losing, losing, losing. But after journaling and observing the way we take our trades and what bring us more wins, what guarantee and provide us with more wins versus what make us lose that much, then we observe that okay, most of our losses comes from lower time frame. So we've got to put a stop on it and experiment with only higher time frame and try to see, because most of the trades we won as well comes from higher time frame, from daily and 4 hour. We just move to lower time frame to look for conservative entry and try to look for breaker block, then try to capitalize conservatively with our aggressive trades. And that's one thing that we do in the market. And another thing we try to do is when we're trading on 15 minutes, we usually wait for 4 hour candle to close to give us an indication. Then we discover that both 4 hour closure and 15-minute analysis that we try to do to use 4 hour still doesn't guarantee the trade or winning, but at least save us some losses. We would have lose some, but it prevent us from taking those trades that would have eventually lose. Then the one that we were capitalizing on using the same confirmation something still lose. So that means it work both ways. Then at the same time, we just have to kind of like, you know, then comparing the wins of that confirmation with the losses of that confirmation, we can say that okay, the losses is greater than the wins. The one that is saved us from. So it kind of cancel one another. So then we just literally have to let it go and move on to something. So it was that journaling and analysis that made us to kind of like move to 4 hour now as our minor structure, so that at least at the same time we can just continue to move from that level for the next few weeks or days or months, so that at least we'll be able to uh, scrutinize our something again, try to see our numbers game, how maybe it's improve or it's worse, then it worsen, then we'll be able to kind of like know what to do next. So our probability game, we are trying to win. I mean, our something require us to just win 3 out of 10 for us to have um for us to kind of have 20% gain. So that's the minimum requirement. But what we are trying to do now is to kind of, we've already seen that our strategy can give us that 3 out of 10. And we are so sure and guarantee that something like that is very, very much possible with the way we trade. And mind you, once then, what we kind of want to do now is to try and reduce the losses from 7 to at least, let's say, to 5. So that at least if we can have 50 win, 50 losses, 50% win, 50% losses, you know how catapulted our return is going to be. So that's the reason why we've got to kind of, move and experiment with this as well. And also note that, okay, we are trading only Euro USD, which is good. We know the in and out of the spear. And mind you, my personal something, it's not even personal. I believe, and which is the reality of the market, that everything we are doing, we are trading dollar. Even if we are trading crosses, the first cross versus the base cross versus the quoted cross, both of them will be converted to USD and be traded against each other, which means USD versus USD here. So your base cross currency will first be converted to US dollar, and base, I mean, quoted one too will be converted to dollar. Then the value of dollar of this base, the value of dollar of this quoted currency will now be compared, and that's what we are trading. So either you are trading gold is valued in dollar. You are trading copper, iron, oil, everything is valued in dollar. So it's just dollar is the exchange rate. Just pick one and reduce you spreading your legs around here and there. So though that's my personal opinion, a lot of things depending on your strategy, so far it provide for it. Anything is good so far you are making money. So at the same time, here we are. So let's just do our little analysis and move. So subsequently, after this much talk, subsequently from next video, we might not just be moving more than within 5 minutes, we are through with our analysis. It won't be that much because it is lower time frame that keep us that much involved. So that is that about that in the market. Anyway, so here we are in the market. Whew. From our last video, we'll analyze this to be a strong low that has been created from this particular leg. Then we break above this high, which happens to be a strong high in the market, which is where is the strong high? Okay, I mean weak high rather, where we are expecting price to close above. So we did have a flip here. That's a flip. That's a flip for us. Minor flip. Anyway, it's a minor flip now for. So that being our minor flip, we have this OB here, the price reacted from, and you can see a break of this structure above, give us another weak high, then price come back. Whew. Excuse me, reversed back into this OB, then proper mitigation of OB occurred, then we move into the highs. We are expecting this level to be broken above and closed above, but it didn't happen. Instead, the liquidity above this level was taken into our trade. Don't forget that we had a trade coming from this level. We have a trade coming from this particular level here. You see, there happens to be a trade from that level. And mind you, at the same time, we have another trade that we have from within this leg here. So it's an advanced something. This happens to be something. And we tap it from that level. So we have this trade still intact. We have this one also intact. Then here we are in the markets. So, ah, excuse me, I'm very tired. I slept very, very late. Sorry for being honest. Now we are reacting from this level and we see that above this level that we are supposed to close, we did not close. And don't mistake this particular leg to be a closure of this one. So here happens to be this particular level happens to be our established level we are expecting price to close above. But what do we have? We have a price reacting and giving us this kind of MSS in the markets. Then the price come above the level, closed above it. But for the fact that another week was created here, did not prove the point that we close above this level because this candle lies within the structure of this one and it did not close. Instead, it created a swing level swinger. Then this particular leg we have here happens to be the leg we will be expecting closure above with this particular leg. But from what market is currently doing, I deliberately waited for this time till 10 o'clock this morning so that at least we'll be able to see if for adventure because I marked these two levels out yesterday. I didn't do analysis yesterday because I figured there is nothing for us to analyze about that we haven't talked about. So this is the level that we are. Well, what do we see? We see a weak through, but did not close below it. So that alone is giving us another level to be expecting closure from. So our level of closure, what we'll be anticipating in the market, is no longer these two levels, this one and this one, but we can see a proper mitigation of this leg coming down. The only place we have an imbalance is this particular level, and anything can happen from within that place. But at the same time, we've got to be very careful as we have a gap, value gap. So we have that gap there on 4 hour. But for the fact that we are here, if we try to close it to low, trace it to lower time frame, we might not be actually expecting anything from within that level again. So which kind of give us some validity that we can be expecting only this particular level. Oof. So this might actually be another level. So now this two range being established now we happens to be the fact that okay, this is the level we'll be expecting closure from. So if peradventure this uh current 4 hour candle close below Jesus Christ, close below this low, then this range, this selected level will be our selling point. So we'll be planning to sell from that level. But if closed above this level is still going to be our buying level. So for whatever week that has been created from within this level again will be our established range where we'll be expecting price reaction from. So I guess that will be all, at least for now. There is nothing much to discuss unless we have this level being either closed below or closed above. So I guess that will be all, at least for now. Thank you. God bless us. Have a lovely and a profitable day. Then watch out for the price. And at the same time, always have it at the back of your mind that forex trading is risky. Only use money you can afford to lose. But personally, I recommend demo trading. Thank you. God bless you.